And we have our friends Mad from Maven 11. We also have our good friend from Sky, Rune, and Lido from Socket. So fun little DeFi episode today, mostly with a bit of a mix across the board and quite a few headlines as of the last several weeks. Even over the weekend into today, there's been quite a bit. So we're going to try to run through these quick, and then we're going to get Rune up here real quick. Once again, guys, thank you for being back here at the Rollup TV. Just me today. Robbie is absent, dealing with some personal stuff, but we keep it going. So let's go. First up, we have the SEC is finally in talks for the market structural bill. That's actually happening right now. One of my favorite accounts to follow for this is Metalex, a lawyer type of account. They do a lot of kind of like DAO work, and Gabriel over there is actually, I believe he's on the ground right now. I'm just trying to pull that up. And so basically what they're trying to do this week is essentially try to get first the Genius Act bill passed. They want to get that through. But they also want to figure out this market structure bill. A couple of notable things that Gabriel posted is one, that this hyperliquid pure airdrop approach to avoid high FTV, low float. This new bill makes it crystal clear that is legal. So, if you're a fan of that model, then that should be good for you. A couple other things that I think are important that are tied into this crypto foundation model. One is, unlike the current over-the-counter OTC markets in SAFs and other token rights, this bill, if passed, requires that the exempt insider sales be reported even if they are occurring on the private market prior to the system's maturity, basically prior to TGE. This should essentially mean that the market will have more transparency into these kind of OTC deals, which we frankly have seen a lot of FUD about. Two, there is not complete prohibition on exempt insider sales prior to system maturity. Again, system maturity in this sense means like TGE. So insiders can sell again, but it's just limited to 15% of their holdings in a given year and 50% in the aggregate total. It's actually far more generous than current security laws. We've been playing in a world, I suppose, in crypto where, well, there hasn't really been too many laws. Couple of other things for you. There's a huge political point here, which is these autonomous systems, quote unquote, are special because they are autonomous. And therefore, this bill doesn't provide a massive loophole to the existing securities laws. We kind of have to be under the understanding that this bill, if passed, will allow for major fundraising and for insiders and investors to cash out before, again, these systems are autonomous, which in the lens of protocols is when the token launches and when the protocol goes live. So there's quite a few different things right now happening. They're actually live streaming this on Twitter on a couple of people's accounts. I'm not sure exactly how or when this is going to get solved. It could get passed today. The other interesting thing on the political side is we are potentially going to see the Genius Act get passed this week. We had Cynthia Lummins recently, I believe it was Saturday or Friday, pushing for it, saying that she is going to be advocating to get that over the line this week, which would be very, very bullish for the stablecoin arena. So that's happening right now, this second. You guys can tune in on Twitter. I'm sure there's some live tweets and streams. And yeah, that's the market structure bill. Overall, excited for more regulatory clarity. Unsure the ramifications in the immediate term of this bill, but we'll be watching closely. And my take is just more general kind of do's and don'ts in the space is important. For example, our fund, it's offshore, and it's we had to do all these entity dealings and such because in order to get into a lot of these early stage investments over the last 2 years, you had to have a offshore fund outside of the US not because there was a lot of scrutiny, but just because the rules weren't really clear. And so I think that having more clear rules is going to benefit everybody, even if the rules impose potentially a bit more stricter, regulations. So up next, we have the markets and media convergence. One of the most interesting things that I think is happening more broadly in the world, which is that markets and media are colliding at an insane rate. Obviously, we have our tickers here. But before we get into that, Plasma had a massive sell out today of their round. People were complaining. I think they did 250 million in the first 2 minutes before the tweet went out. And then they raised the limits to 500, and then that was sold out in 5 minutes. One user spent $100,000 to in gas, which is transaction fees, to deposit 10 million. My take on this is not that necessarily that ICOs are back. This is an interesting model. Also, side note, I think people are fading pump.fun. I think, I spoke to a couple investors here in the city over the weekend and late last week, and they're trying to allocate serious amount of capital into the ICO. I know it's at $4 billion FTV, but I think people are kind of misreading into the value of that. So that's kind of like aside the point. Plasma, though, successful launch. I think they're going to end up raising this to being around 2 billion. General take here is that there is demand on the sidelines for new tokens that are fundamentally strong. I think we're seeing way too much of like this Bitcoin dominance only, that alts are dead, even if you want to call them alts. And so I think this was a strong sign for the demand. Also for stablecoin exposure. Circle is up 4x from its IPO price. I think a lot of institutional investors, I read a tweet today from the Dragonfly guys, and they were saying that, I think it was Rob from Dragonfly was saying that he's been getting calls from non-crypto native investors per se, or institutionals, and they're asking about how to get stablecoin exposure. I think Circle is one example, and I think clearly Plasma is another. There's other chains, but I think that general trend is only going to accelerate. And it's funny, I had Yano on the pod and on the TV last week, and we talked about how stablecoins have drastically improved the perception of the space. And I think more broadly, if you're looking for stablecoin exposure, there's only a couple vehicles to do so. That's why Plasma's ICO today was super hot. Again, disclosure: our fund invested in the earlier round of Plasma. It was at a lower valuation than the current. This current one is at the round that Founders Fund came in at, which was 500 million. And I think that this thing's going to do really, really well. But of course, it's my book, so that's a disclosure. All right. Last one before we get Rune on. I think we have, again, I was talking about this convergence between markets and media. And this to me is particularly compelling. We've seen this idea of markets and media colliding for a while. And so as of recent, X and Polymarket have came out to make a announcement that they will be collaborating that Polymarket will become the official prediction market of X. Again, this was like last Friday, I believe. This news dropped. I just think generally that this is a massive win for the crypto space as a whole. I think this is a consensus take. I think the more kind of intricate second order thinking is that actually the world is heading into this more and more financialized state. I kind of call it like the degenification of the world in some capacity, right? Where like everything is becoming financialized. You'll be able to bet on a lot of things, right? We have Kaido, we have Noise, we have these mind share markets. Polymarket is this prediction market. And so my general take is that if you can long in whatever capacity this trend of like the financialization of the world, and also just the gambling culture of the Western world, I think if you can find ways to long that idea, that you'll do well. Unfortunately, we didn't get a slot in Noise, but I think that's going to do well. And I think that a couple others will do quite well in that realm. But the larger kind of idea here with Polymarket and X is actually more around this idea around crypto adoption that I think people have struggled with, which is that we've been kind of pushing this idea of blockchains and crypto in people's faces, right? You got to do it. You have to have a wall. You have to have a chain. You have to get on the chain, all this stuff. What Polymarket's done really well is that it's done a good enough job of breaking into the broader mind share of the sports world, of the politics world, of the pop culture, and obfuscating the kind of crypto aspect behind it. And so when you look at what Polymarket's really doing, it's bringing tens of thousands of users and transaction volume directly to Polygon, which is where the application is held on, and it's onboarding a ton of new people to the space. X just happens to be where all the news is nowadays, as well as all the crypto users. And so this just kind of seems like a natural fit. So media and markets generally, I believe, will continue to collide and coalesce. It's just a matter of how can you find the opportunity to like long that combination, and then also on like that more degenification, gamification of the space as well, and just of the broader world as a whole. I've seen some really interesting early stage stuff that is kind of doing this, right? And I'm excited to kind of see how this broader trend plays out. So that's the markets and media segment. And those are our main couple topics for the day. We're just going to take a quick break here as I pull up something that I've been looking for. And you guys, thank you for bearing with us today. Robbie will be back very soon. We have 4 awesome guests coming up. I believe we're waiting for Rune now to join up, and we will be ready to go. So Rune is the original founder of Maker, and he is one of the larger kind of early minds of DeFi, along with the Stanis and the Canes of the world. Originally known for Maker DAO, as many of you guys know, which is now transitioned into Sky and USDS. USDS has pushed over $8 billion in their trading vault or in their stablecoin total supply, and we're going to talk to him about that. I think he's just running a bit behind here. All right. All right, guys, let's have a look at what the markets are doing today. BTC looks great, 108,404. We usually play the game with Rob of what is the price going to be at the end of the stream. I'm going to take higher today, 108,470. We'll see where we end up. I know that people that are watching the markets are excited. I think ETH is poised to actually come back and do quite well, so I'm excited about that. Of course, Hyperliquid's being one of the faster horses. Murad is right with his SPX, which is hilarious to me. You see a lot of videos from that, and stocks are pushing to new highs, which is I think a bit surprising for a lot of people who thought that the macro game was going to be not in their favor. So we'll see kind of how that plays out, and we'll get Rune up here in a sec, guys. Man, that plasma sale was insane. Jeez. Oh my gosh, this is crazy. So the Paraguayan president got hacked on their Twitter, and apparently they've been hacked to make it seem that BTC is going to be legal tender. I'm going to throw this up here, and it's obviously not going to be legal tender, which is crazy. And so this guy, his name's President, I don't know, President something here. He gets his account hacked, saying that it's legal tender, and he posts Santiago Pena posts a Bitcoin address with a call to action saying, investors, your investment today will determine the scale of this rollout. Secure your stake in Bitcoin now, and post a Bitcoin address. That's insane. And obviously should not be sending any money there. I would certainly not do that. This is just something else. All right, guys, as we wait for Rune, I think he's just running a bit behind, waiting to hear of him. Yeah, I just want to talk kind of more broadly about where I think we're at. So we had a pretty good call with Yano last week on the TV, and he mentioned that he thinks that we are in stage 4 of the cycle, which I think is going to be particularly alarming for people who are not really ready for what's to come. And so, with that said, I don't know. It's just hard to tell when Jordy from Selene that we had on the pod and Felix, 2 macro people, have been extremely bearish for the summer. But these people keep raising billions to participate in Bitcoin. Like, there was another $300 million Bitcoin raised today, and that was it. It just seems par for the course now, which is just really, really interesting. So, all right, we're gonna give it a couple seconds, and I think Rune's gonna join. I just can't believe we're just seeing so much demand for these Bitcoin treasuries, and we're like the cycle is already in the second half, and it's insane. So I got some questions today for Rune around the rebrand, around Sky, around USDS to $8 billion in circulation, their agent framework, what's going on with the savings rate on Optimism and Unichain, and just some interesting Bitcoin consensus takes. Also got to ask him about Circle, what he thinks about that. He's been having some interesting tweets about Bitcoin's security model and more. Rune put out a tweet 4 days ago saying, "What if Elon defects to China?" Oh my goodness, that's so funny. All right, guys, we're gonna get Rune up here momentarily, and then we should be good to go smoothly for the rest of the stream. Just a bit of back end stuff here. Should be no problem. Cool. All right, we'll get him up here now. There we go. And let's get him in the back end. Meet. And Rune is up. We're going to get him set up real quick in the back. There he is. Rune, how are you, man?
Hey, I'm great.
Good to see you, man. Lot going on today. And we got the stablecoin super cycle, man. How are you?
Yeah, I'm great. There's so much happening, and I think the space is really coming back after, just the ups and downs that we always have to deal with in crypto.
Yeah, man, I got to start this off and just ask what your thoughts are on Circle. Did you expect the IPO to come out of the gun at a 4x here and trading at over 130? Do you think that the entire industry has been caught off guard? What's your take there?
Yeah, I mean, it's huge for sure. I mean, it also, I think it makes sense actually, in the sense that it's always been clear to me that stablecoins are just the most interesting and most powerful use case of crypto. So I'm not surprised that you have this kind of blue chip project just getting massively hyped and just seeing so much interest. And really, there's just that type of, like, I don't know what to call it, like sort of Tesla-like FOMO, right, happening, where a lot of people, they just want to have some kind of stablecoin exposure. And of course, this is great for a project like Sky, which is also offering a stablecoin, but really like a sort of I guess a much more advanced version of this. Eventually, I think a lot of that interest and understanding of why not just stablecoins but DeFi in general, why that is so powerful, that's going to really benefit the whole space, I think.
Yeah, man. Yeah, I keep seeing Vance from Framework pushing Sky when we see big news from Circle and things, because it's like it is the on-chain version of something like a Circle, like a Tether, but just in a much more DeFi native way. And I think one thing that you guys have really kind of pushed for in the last 12 to 18 months has been these permanent protocol revenues, stablecoin payouts, and really just trying to create a robust way to grow USDS. And I remember being at the Sky launch party, I think in Singapore. Or was it Singapore last year?
Yeah.
Yeah. And people were, kind of questioning about the brand and this and that. But now it's clear, right? $8 billion and growing of total stablecoin, supply and a very, very unique flywheel. So I'm just wondering where the kind of revenue and the growth of USDS is coming from primarily, and where you see a lot of that actual activity coming from, which types of users, and what type of activity have you been seeing for USDS and for Sky?
So the thing that's interesting with Sky's business model is there's USDS, SUSDS, right, which is the savings version of USDS. This is like the new, the kind of the flagship product of Sky that was introduced, almost a year ago at this point. And at this stage, I think most of the demand for this is coming from like institutional users, like very large scale users. And it's actually quite a different user base than what I would call sort of the OG DAI user, right? Which is kind of like that's where the network effect of Sky comes from, which is the original DAI stablecoin that we launched with as maker like 10 years ago at this point, which grew to like a quite a large size and got its own like unique grassroots like deep DeFi audience and user base. But then what happened is that user base is just like it's kind of a natural limit to those extremely sort of deep dive, like ultra advanced and sort of in the weeds DeFi users, right? Which a lot of them are really into using DAI, but for a regular person and for an institution, as soon as it doesn't have USD in the name, basically they get confused, right? So that was a reason we're kind of branching out and evolving beyond just like the original iteration of the product with USDS, with SUSDS, and then with a lot of the new features that are coming with Sky that are just meant to kind of, ultimately just finish off sort of fleshing out the concept of a decentralized stablecoin managed by a decentralized protocol using governance and using advanced and transparent control mechanisms to just make it the best possible product for the user.
Yeah, and so you mentioned SUSDS, and it's now live on Optimism and Unichain, which I think is kind of collectively getting a strong kind of foothold on this, DeFi specific use case chain being Unichain and of course Optimism. I'm curious if you see SUSDS and USDS in general being primarily meant for this institutional crowd, or perhaps this this different crowd than just DAI users. If there's a specific chain ecosystem or place where you want to be most active, right? Is it Unichain? Is it Optimism? Is it Ethereum mainnet? Kind of how are you thinking about the evolution of SUSDS with regards to being kind of multi-chain and being in a place where the core people that you want to use the product get the easiest access to it?
Sure. I mean, I think actually in the end, the fundamental, like the most important target user of USDS and SUSDS is actually, like to sort of really put it on the edge, is actually mercenary capital, right? It's like institutions and just like this completely hyper rational, totally sort of illoyal user, right? That's just looking for where can I get the best possible risk adjusted return for the next, like couple of blocks, and then I'll rethink it after a couple of blocks, and maybe I'll switch to something else, right? And so ultimately, I think this is where, like, this is the type of DeFi and even just general finance user that is going to be the most scalable in the long run. So the entire Sky ecosystem and the Sky protocol backing USDS is fully optimized for this type of user that is just like, basically you have to offer the absolute best risk adjusted return or they're gonna jump ship, right? And then the thing is, I mean, if you optimize, I mean, and that's the other thing is, like, if you optimize your product to cater to the pickiest, most sort of hard to please possible user, then it's also going to be a really good fit for every other type of user, right? So in my opinion, like a regular retail crypto user that's looking for a good stable coin, there's no reason why they should be left with an inferior product compared to somebody that is using like AI assisted robo advisors or something to get the best possible product for them, right? So that's kind of, I mean, that's a part of the kind of the strategy and the philosophy around the system, is that once you have that, once you really, the product itself, you've made it as good as it possibly can be, it's just very well suited to then be spread out to more audiences and sort of target more demographics. The question is then, how do you then actually do that? And in the case of Sky, all of these questions of like, how do you achieve X, Y, or Z, they're always answered by the use of the Sky agent framework, right? So the fact that Sky isn't just, it's not just a stablecoin protocol, it's an entire ecosystem of these tokenized agents actually that kind of split up in a sense, or subdivide the system into different areas of interest and sort of areas of focus, and then let individual communities basically specialize in what they think, what they believe is the kind of the big opportunity for basically bringing USDS to market, right? So even if USDS at its core is optimized for this like hyper rational mercenary capital, then if somebody thinks, well, this is going to be a great product for, you know, financial inclusion in South America, they can go and do that, and they can be the ones bringing USDS to the South American market. And if they do that, there's actually a way for them to make a really good profit and sustain a solid business model from basically creating that connection and basically acting as that distribution layer.
Yeah, I mean, I saw you guys put out SP Beam about a month ago or so, and this kind of ties into the Sky agent framework and the stars, right? Where you know, there's this automated rate setter per day, and you can kind of have these updates to optimize for your holders based on liquidity rates, etc. Are these rates adjusted by agents? Is that how they're actually being adjusted? Like, is an agent analyzing a framework and then being like, okay, we need to adjust based on a given set of parameters?
So all of these components, they're still just getting in place. So actually the SP Beam, also referred to as the rate setter, is like, it was implemented, like, I don't know, a couple of months ago or something. It has not really been fully activated yet, in the sense that it's not operational in its kind of final form. And so the reason for that is actually because of the lack of active star agents, as they're called, which are like the kind of the workhorse of the Sky ecosystem, or these things called the stars, which are basically like the business entities that basically focus on different like niche markets or business strategies. And then they, in some sense, they kind of compete with each other. They cooperate with each other, they synergize with each other, but they also compete in order to, for instance, drive the rates up or down. So basically what happens when you have multiple stars, like in live operation, which is coming really soon. I mean, that's going to be the case within, like, at the latest would be 2 months from now. There will be like multiple of these actively deploying the collateral backing USDS, and then like simultaneously cooperating and synergizing while also competing to basically deploy the collateral in the most efficient possible way. And through that process of the stars basically going out and trying to generate more profits for themselves by basically better managing the collateral portfolio of USDS, they're going to influence the rates. So let's say that a star, like it finds a way to deploy into a new type of real asset, right? New type of like TradFi asset that has a really good risk-adjusted return. So you can deploy a lot of collateral into it without needing too much of like a risk buffer, right? So every time a star deploys into something, it needs to put up like a little bit of basically risk capital. Like, it needs to take a little bit of that risk itself. And if something goes wrong, the star takes the loss first before Sky starts to be at risk of taking losses, and even USDS holders, right? And so if a star then finds an opportunity that gives a pretty good yield and doesn't require too much of this extra risk capital on top, then it can start to really like borrow large scale out of Sky, right? and then deploy into this new asset. And then the thing is, what's going to happen is as this star like generates more and more USDS and basically increases the supply of USDS in the market, if you don't have enough buyers of this new USDS, right, because there has to be a user somewhere that actually wants to hold it, then the system will just automatically use the rate setter to increase the rates. And so this way, as Sky is basically able to automatically, through this decentralized process that relies on multiple stars competing with each other, as Sky gets access to better risk-adjusted return out in the marketplace, it will naturally offer a better risk-adjusted return to its users. So this is where, as a user, you don't have to think too much about this stuff. You can just sit back, and the savings rate that you get from holding USDS is going to be the best possible savings rate that the market can source, and also it's going to always be properly risk adjusted, right? So the risk doesn't change. Like, even if the rate goes up, that doesn't mean that now suddenly there's bigger risk of everything exploding. If the rate goes up, that's because an actual better risk adjusted return has been found. Of course, this is not like, this is all managed by Sky Core, implementing quite advanced risk management frameworks. And of course, today, they're still relatively new. They're actually based on banking regulation, right? So they're based on what's called Basel, which is roughly how banks themselves are regulated, but just, more efficient and not so, real time, and just doesn't have all the drawbacks that TradFi has, right? But fundamentally, it's a conservative, classic approach to how do you manage risk when you're trying to, prioritize that users should not be at risk of losing their money. Like that is just 1000% the most important objective, right? And then once you have made completely sure that people aren't going to be losing their money, then you can start to deploy into interesting opportunities and figure out how to generate this very attractive risk-adjusted return.
Yeah, and I think one of the best parts about the mechanism which you've designed to build USDS, and then obviously this core focus on the security parameters, is around what kind of got us all excited about DeFi outside of the the openness and the permissionlessness and this censorship resistance, and the key ideas is this idea to kind of like stack these things on top of each other and build different yield opportunities or different kind of protocol relationships together. And so when you're looking out into the DeFi landscape today, what are some of the projects which you've been most impressed with regards to their ability to compose well with others, or even compose within Sky and USDS?
I think the really big ones is like Aave, Athena, Morpho. There's also there's like Maple, Fluid, or some and Pendle. Like, these are all examples of these like OG well-established DeFi protocols that USDS holders are now basically able to tap into just by holding SUSDS. And this is all managed through Spark, the first star, right? So Sky just basically delegates control of the collateral, or rather a big portion of the collateral portfolio is delegated to Spark, and then Spark is taking care of interoperating with all these various DeFi protocols out there. And then actually, because of the magic of DeFi, because of money Legos, because of interoperability, it's possible for Spark to actually safely do this without getting stuck in the kind of DAO process hell that is usually what ends up happening in this kind of situation, right? Because you have these sort of several layers where like Sky is using its own sort of governance cycles to just build the overall framework, and then basically say, look, this is what the overall framework looks like. You can sort of play around within that, but you can't break these rules, right? You can't take more risk than the framework allows you to take. But Sky doesn't like prescribe or really understands how to then make a good business once you are sort of as long as you're not creating tail risk, Sky doesn't really care beyond that. And it's a hard problem to figure out how to make a profitable business out of this. But then in Spark, you have a team, and you have people that are very focused on this question then, right? Of like, okay, once I know that whatever I do, it's within the sort of the safety parameters of the risk framework. Now my number one priority is generating profits, right? Like tapping into new opportunities and moving really fast. So you get this kind of like the best of both worlds, where you have a secure framework keeping people's money safe, but you have stars that are able to then actually be innovative and move fast and generate good profits and sustain their business models. And then it gets even better when you get multiple of them, right? Then you get a really, really dynamic free market, right? Where you have multiple stars, they'll be competing with each other, they'll be learning from each other, and they'll also be synergizing and sort of sharing the total scale of the whole ecosystem. So I think it's going to be really, really exciting to see how Sky's going to be everywhere, right? It's really through the stars, it's going to be tapping into every single interesting, every single value creating protocol out there.
Yeah, Rune, one last one for you. As we sit here today, I believe stablecoin total supply or market cap is around 250 to 60 billion. With what I would believe to be the road to 1.5 trillion over the next 18 months to 2 years. How do you see that kind of race playing out? Or maybe better asked, what is your plan for USDS and Sky to capture a large part of that growth in the coming 2 years?
So at this stage, the entire strategy is to focus on evolving the ecosystem of stars, right? And really promote the builders that are growing these stars. So I think it's gonna, I mean, I would argue like it's kind of like it's a sort of exponential bet, in the sense that if the star ecosystem really takes off and the amount of, you could say, decentralized, institutionalized knowledge that exists in the star ecosystem, right? So whenever somebody comes and they create a new star, it's super easy for them because they can copy all of the knowledge and all of the learnings from all the prior stars, right? And not to mention the technology, right? Which is maybe the most important part, that you have this like huge, ready to go, ultra secure DeFi technology stack, right? That you can just use right out the gate. That gives you leverage, it gives you governance, it gives you like access to a huge contributor ecosystem with sort of a reputation and vetting and kind of feedback mechanisms for how to get things done and how to pay contributors fairly to do work for you. And so yeah, if that takes off, then like I said, I mean, the ultimate customer of stablecoins is the hyper rational capital.
Yeah.
Because the same thing that Sky is doing and the stars are doing, right? Which is we are kind of, it's like an AI arms race, right? Like everybody that's deploying money. I mean, actually, most are probably still just busy doing paperwork, but increasingly, it's clear that if you want to have a chance at actually delivering a competitive risk-adjusted return for your customers, you have to deploy, increasingly sophisticated, data-driven AI models and just like automated solutions to this, right? But it also works on the other side. I mean, that the users themselves, they also have access to tools that basically help them how to get the best possible risk-adjusted return. So over time, that's what I'm basically expecting, that like even a completely random person that's used some like phone wallet to manage the money, that phone wallet is going to have some like half decent open source AI.
Yeah.
Right. That's going to help them not pick a stable coin that takes a 1% cut. It's going to pick the stable coin that gives them, a really strong free market driven yield like SUSDS does. Right. And then also that it takes an extremely low spread. Right. So that's the other thing with Sky, is that it sort of knows right out of the gate it's not a good idea to try to take a bit cut from the customer, right? You gotta get used to taking a very thin slice.
Rune, I appreciate your time. Thanks for joining today. Very, very impressed from the day one of being active in DeFi on my side in late 2019 into early 2020 and being part of that kind of crowd and then all the way up till now. So really appreciate your time and looking forward to watching USDS grow alongside Sky as the stablecoin expansion continues. I think this sector is one of the hottest now for good reason. So excited to kind of see this continue to play out.
Thanks for having me.
Thanks, Rune. See you soon, man. All right. Up next, we got Lido, a good friend from back in the day, running Crypto Testers. We were doing some of the earliest DeFi content together. We're really interested to get his take on where we are now. I'm sure he's going to have some interesting thoughts around where this space has came, as well as what he's doing with Socket and more. And yeah, Rune is quite deep in the DeFi trenches, as you guys can tell. Very much so interested in the development of stablecoins more broadly, and just trying to do it in the right way. And so I thought that was the key takeaway from that conversation.
Yo, Andy, how's it going, man?
We got Lito in the building. What's up, man? Doing well. How are you doing, man?
Perfect. Yeah, markets are hot right now. Excited to be here.
I was just giving you the intro as one of the other core DeFi educators back in the early 2020, late 2019. Actually, you were before us at DeFi Slate. You guys were doing crypto content way back when.
Yeah, exactly. I think I was, along with Bankless, I was one of the first to like do content on like DeFi and Ethereum and so on. And then at some point I stopped. I got more involved on the operational side of, running crypto projects. But yeah, it's true. I started with content.
Yeah, man. I mean, it kind of felt like DeFi kind of pulled back for a while there in terms of mind share, in terms of yield opportunities in the 22, 23 bear market. But now quite the resurgence with institutional interest, RWAs, stablecoins, of course. I just had Rune on talking about Sky and USDS, obviously the OG maker stuff there. So yeah, I mean, it's definitely like DeFi's coming back in a huge way, just far different than what, perhaps you and I were used to back in the day.
For sure. I mean, the thing is like 2021, 2022 proved like these DeFi primitives, right? Like AMMs, lending protocols, all of these things. Then it's true that like 2022, like end of 2022, 2023 was like a bear market, but that's a good stress test for DeFi protocols, right? Because like liquidation cascades and all of these things, you kind of see what is actually like, sound and secure and sustainable and so on. And now we know that. And now we have actually quality assets that are coming on chain with RWAs, and you can sort of just plug them into these AMMs, these lending protocols, these interest derivative swap protocols like Pendle, whatever it is, right? But what was always missing for a second leg of a DeFi bull market was actually bringing, quality, pristine assets on chain, which is now happening. I'm super excited about that. I was like a year ago, or even before that, I was one of the first people or only people to talk about like RWAs, and people were saying like who wants to trade stocks on chain and like all of these things, and they were saying like Synthetics had stocks in like 2021 or something. I was like, with like transaction fees on Synthetics of like $150 per swap, like tiny liquidity, broken UX, like obviously no one wanted to trade that. And plus like those stocks were actually not real stocks, they were like synth, right? Like these synthetic assets. So you were not even like guaranteed that you could actually like swap out of the trade at like the right price and so on. And so like it's really nice to see now the tide shifting and RWA slowly becoming like a consensus view, and lots of exciting projects popping up.
Yeah, man, I agree. And I think there's also just a lot happening on chain as well, right? And you put out a pretty interesting tweet the other day with regards to product feedback, using Bungie in this case. I'm actually just more curious, like what is your, what are your favorite on-chain applications today? Like what are you using? Where are you getting yields? Like what are some of your top couple on-chain apps?
Yeah. I don't think that my answer will like be, surprise anyone or something. I think my like top three are probably Ethena, Fluid, and probably Polymarket. Ethena, I just think it's amazing what they did, tokenizing the basis trade, which, on average, like yields more than the T-bill rate by, like 2x or 3x most of the time. And that has just unleashed, it just has like increased yield in DeFi across the board. And it's just amazing. So I farmed this quite a lot. But then Fluid is really my like passion project. It's actually the first time that I really feel like I'm a part of a project, like part of the community, without actually being part of the core team. Really love that project. I'll just explain in a nutshell what they do. Basically, like what they have really enabled, what is completely unique, is turning debt into liquidity, right? So you have, for example, like this thing called smart debt, which is like USDC, USDT smart debt. Instead of just borrowing a single asset like USDT, you borrow USDT, USDC smart debt, and that essentially means that your debt becomes a productive asset, which is completely mind blowing, right? Like for the first time, your loan will actually kind of generate yield and pay off your loan essentially. And so that's how they've become like the second largest DEX on Ethereum. They flipped curve in terms of volume, especially on like stable swap pools, and it's just the cheapest place to borrow stables. So you just need to change a tiny thing. Instead of borrowing USDT, you just borrow USDT, USDC. And you still can like withdraw the money and like spend it on whatever, like go yield farm with it. But it just means that your borrow cost, instead of spending like 5% on your loan, it'll be like 2% or sometimes even 0%. In the best cases, you even get like paid to borrow, which is crazy. And so that is completely mind-blowing stuff, like real engineering innovation. And I love that project. Polymarket, I mean, I think that's like, it's a consumer app, so I don't really need to explain it, but it's crazy how that one has like broken into the mainstream, it's being cited by all the newspapers. And I just love like, having an opinion and having like putting my money where my mouth is. So I'm regularly like, putting money on whatever market, and having a lot of fun on chain for sure.
Yeah, man. Yeah, I feel like while all of this is happening in terms of RWAs, institutions, as you mentioned, different yields, new primitives, Fluid, Polymarket, there's also been a opposite force almost in the market, which is the EF has been pushing for kind of not constricting the treasury necessarily, but formalizing their program, right? And I think across the board, across different foundations and teams, you see a bit of a restriction in non-Bitcoin asset prices, right? A lot of that kind of market has been dry for some time, which I think the sentiment is very on the far side of the spectrum of that never coming back. When it does feel like we're probably closer to that coming back than we have been in the longest time. But these are like kind of like contradicting forces in a way. And, I'm curious, as of the research that you've done into the EF and just kind of like what you're thinking, if you were running the EF treasury, what would you do as a result of this previous treasury policy? How would you improve the way that the EF is spending money?
It's a great question. Well, first of all, I will note that like I do think it's a very tough thing to do, as a credibly neutral L1 foundation to start kind of like using DeFi protocols, because by definition you like cherry pick, right? You'll pick winners and so on, and they've already done it by using Aave, and I understand why, right? Like Aave is better tested, it has like massive liquidity and so on. But in a way, I know, because this is how CT operates, you'll always have people that are not happy about this, and they'll start, turning this into FUD essentially, right? What started as actually like a positive thing. So super difficult line to walk, and they'll need to walk it very carefully. But I think they've outlined a bit of their like strategy in the recent blog post, and I think they definitely want to err on the side of like security and running very conservative strategies. But I do think it would be cool in the next step to kind of like show appreciation for some of the other lending protocols, right? These money markets. I think like Euler, Morpho, Fluid, they've all done like amazing over the last few years, and I think it would be a nice like token of appreciation to show them like we see this and we like it, and any other team that does like innovates and works hard, like will get a similar kind of gesture. And obviously, like some of these lending protocols also have like better terms and so on, so it makes also sense from a rational perspective. But more importantly than all of this, I think what I would do is I would fund something like an Ethereum focused version of Alliance DAO, right? Like a very like consumer focused startup incubator. And actually, if I wasn't working at Socket, I would probably I would step forward.
You just build it yourself.
Honestly, I would ask Vitalik for funding. Like, you don't need much. Like, honestly, 10, 20 million, and write small checks, but most importantly, really help young founders with like hands-on support. I think this is really what's needed, right? Like right now, Ethereum was always this incredibly neutral place, but also a hard place for founders to kind of make it and get discovered and so on. That's kind of what L2s have now taken on that job on them, like Base and stuff, they incubate apps. But like what I would really do is build this incubator, provide small like seed checks into promising consumer startups that build on Ethereum or L2s, and really help them with everything go to market, right? Because that's what I feel like what founders really want in this day and age. But yeah, so this is really what I would do. And I've seen some cool stuff. For example, just the other day I saw this project pop up called Ethereanism. I don't know if you've seen it.
Ethereanism.
But Ethereanism, I'll send you a link if you want. But essentially, I have no affiliation, by the way, but they are, and I saw some like Ethereum OGs had also funded it and so on. But basically, they've realized that like Ethereum needs more marketing, and especially what drives attention right now is these like short clips and so on. And so they have like this kind of like open marketplace where any like creator can come and edit videos, right? They'll have a format. So for example, like the recent speech of Vivek from Etherealize at the Congress, that's going to be like the canonical piece of content, and then anyone can like come in and edit that and to make it like very TikTok-y and with like sound clips and animations and so on. And the best will kind of win $1,000 or something. And I've seen there's like great submissions already. I think these are all like cool grassroots responses to this marketing problem that the Ethereum has. And overall, I think like there's amazing signs right now across the Ethereum ecosystem.
Yeah, and I think within Ethereum and then within L2s and then more broadly, we're also getting closer and closer to solving a lot of the interop problems, which I think a lot of the naysayers have been essentially saying that we wouldn't be able to solve in some capacity, which I think is, I don't know, it's like the L2 roadmap worked. It did what it's supposed to do, but we are still stuck in this state of kind of figuring out how to bring it all together. You've been working quite closely on Bungie and Socket as of the last, I don't know, about year or so, maybe year and a half. What's the state of things from your perspective in this interop world? I know that you guys recently brought Bungie over to be an open marketplace rather than being an aggregator, so you may have some thoughts there. Just kind of give me your rundown of the state of multi-chain and kind of where you guys are placing most of your focus.
Right. Yeah, you're exactly right. Like we launched Bungie Marketplace, and why we launched this, right? Like Bungie started off as an aggregator, and we kind of we were aggregating manually as a core team. We were integrating each bridge, across Stargate, native bridges, all of these things across all the chains and so on. And we do that manually, and we realized this is not scalable, right? Because we're entering a day and age where like interop is getting complex. There's a million chains, right? And so really what we did, we copied the Amazon playbook, right? Like if I don't know if you read the Amazon like Jeff Bezos biography that explains how he built the company, but essentially they started by selling books, and they had identified books as just being like a very good product to sell online. Because physical bookstores are like capacity constrained. And so what they did really is they aggregated the 10 largest book suppliers in the US. And when a user order came in, they would just route it to any of those 10 book suppliers that would have that book, and then the supplier would send the book to the user, right? But very quickly, Amazon realized like we actually don't have all the books, and integrating all of these book suppliers and the inventory systems, it's a pain in the ass. There's not 10, there's a million, right? Especially if we want to cover like every book, and there's lots of niche ones and so on, right? And so what they did is they opened their marketplace, and suddenly they didn't have to integrate the book suppliers anymore, but the book suppliers, all of them could just permissionlessly join the marketplace, right? And suddenly they were not constrained to books anymore, but they could sell like garden tools and electronics and whatever. And so we did exactly the same thing, but for cross-chain liquidity. So we essentially have built like a marketplace where a user signs an order, and then we have these agents that can sort of like come in and fill the order of the user. And we don't care about how that is done, right? It can be using like active liquidity. This is what's often referred to as fillers, a lot of these intent bridges work with like fillers, market makers that have active capital. But we have also like agents that don't need any capital to do what they want to do. For example, they can just like, integrate, because we haven't integrated, for example, let's say wormhole NTTs. You're familiar with them, right? Like a specific token standard. We haven't, as a core team, we didn't get around to like integrating it, but one of those agents might have, right? And they can then like just submit a proof in our marketplace system and say like, and then they win the order, and they get to fill it for the user. And the same, so this is super extensible. We also have like these kind of actors that like we call solvers. They don't have any capital either. They just route an order to the best DEX, because that also is a huge kind of difficult problem to solve, like how to best route a swap across DEXs, because there's so many DEXs. It's complex algorithms. And what we've really realized is like when you outsource a problem to the market and make it permissionless, very, very good actors will step up and take on the challenge, right? You've seen that in MEV, for example, or even like in the security space with audits, like things like Cantina. Like, you just put the thing there on the internet, and suddenly there's like 7 billion people, some of which are insanely smart, some of which have capital, some of which don't, that can like do it, right? Yeah. And so this is how we think we can have, similar to Amazon, had the best user experience for consumers. We think we'll have the best user experience for cross-chain swaps, and lowest latency, best prices, highest coverage, like all of these things, right? And really what Bungee now is really the same way that Amazon kind of guarantees that when you order something from a seller on Amazon, you'll get your product. That's the same thing that we guarantee, right? We guarantee that you get your funds on the other chain, and we make sure, with our like settlement contracts and like proof system and all of that, we make sure that this is trustless from a user perspective. And super excited about this. I think this is the direction, because the space is getting so fragmented. You need something that can just like grab everything and consume everything and offer it in a seamless way to form factor to users. And obviously, like we have all these wallet partners like Rabby, Coinbase, and so on. They just integrate our protocol, and then users get to swap it within a second or two in their wallets. And so this will get us a lot closer to a seamless interop world that you just mentioned.
Yeah, man. Yeah, I mean, I'm looking forward to seeing that, as well as the evolution of further natural language models to interact on chain, with something that I'm excited about more on the front end for users. So, Lado, I appreciate your time today, man. Running low here, so we'll have to run this back in 6 months and see where you guys are at, see where the market's doing. Always a pleasure, man.
Take care, man. Thanks for having me.
Cheers, man. Always good to speak to some of the OGs in the DeFi education space, as well as just broadly in the interop space, trying to make this thing a bit more seamless and put together. Up next, we have Mads, good friend of mine from Maven, just raised a $100 million round. Mads is leading a lot of the charge on the research side. one of the more prominent researchers in the space. And I just found a amazing tweet to start this conversation off with that he's not ready for. So this should be hilarious. Let's get him up here. Hey, Mads. How are you, man?
I'm good. Good to see you again, Andy.
Good to see you, sir. I'll see you in Cannes probably in what, a couple weeks as well?
Yeah, I think it's, 3 weeks or something? It's quite soon.
Yes, sir, it is. The tweet that I was talking about, Mads, is one from Chao Wang, which I think you'll actually resonate quite deeply with, but I'm curious what you think. He tweets today, 20 minutes ago, L1 monetary premium will likely compress to 0 in the coming years, and the process probably already started 1 to 2 years ago. I don't know if you saw in any of the Hasib and Gwart podcasts about the L1 conversation, but curious your take on that tweet from Chao.
Yeah, I mean, first reaction is I agree with him. But also, I think if you look at most of the successful applications of today, all of them want to become their own L1. Hyperliquid is a good example. I could see a pump.fun chain down the line as well. And even like the big sort of considering DeFi as today's theme, even like the big DeFi giants of past ages, and some of them are still quite large today, also looked into getting their own chain at some point. So I'd say that I'd agree with it. But also, there's a reason why all applications want to control the underlying infrastructure. And I think that's just a matter of how value accrues. So that it's a good point, and I do agree with him.
Yeah, man. I mean, I think there's this very populist like infra towards apps trend, and kind of, you know, I don't know, however you want to assess revenue to no revenue, or kind of, you know, I called it a meta and got destroyed on Twitter for it. But I think it's quite funny because it's like, okay, we have apps that want to basically, as you say, have this opinionated block space, or kind of have this kind of full stack execution of, you know, or control. And then you look at some of the best apps today that people are raving about. As you said, Hyperliquid is a good example. And it's a perfect example of that kind of full stack, kind of all the way from the top to the bottom stack. So I think what Chao is probably mostly speaking towards is like the undifferentiated L1, kind of like the copy paste DeFi ecosystem ones. But yeah, I don't know. It's just hard to see how, like I think also he's kind of pushing on like the monetary premium thing of like, oh, some of these things will have like that money status, like that, you know, Jordy from Selene calls it like community money, kind of how Bitcoin does. But I don't know. I'm not sure that's really a conversation that's going on anymore either.
Well, I mean, I put it this way. Pump.fun might have made $750 million in Solana by being just an app on Solana. But if they had been Solana itself, they would have made billions instead of 750. Not sure what they would do with that, but hey, I mean, they would have made more money in that case. So I do agree with him, like undifferentiating L1s. I think we're seeing this quite clearly in terms of what people are excited about. Like, I'm not excited about another EVM L1, where the apps will be exactly the same. And it doesn't matter that you've built an L1 that is, you know, has concurrency, so like parallelism. If nobody builds apps that take advantage of that parallelism, then like it's just going to be the same what we have on Ethereum or the L2s, right? So I think if we do see like net new applications on those net new L1s, then maybe it'll be a different conversation. But from what I have seen in terms of like deals coming by, that has not really been the case at all. But I do see like applications that are creating a lot of MEV, since it's mostly trading applications. Pump.fun's a good example. They realized they were giving so much fees away to Radium that they build their own AMM, right? And then the next step is like, okay, how do we take advantage of arbitrators that are extracting MEV? Well, if we can control ordering, or like be the auctioneer in that ordering process, then we can extract that. And currently that's obviously Solana validators themselves, plus Jito with the Jito router. So that would be the next natural step. But also you do give away a hell of a lot of composability, which is fine. Hyperliquid's case, because it's a perp exchange, you just deposit USDC and then you go wild. But it also gets hard to get users, right? I do need to bridge to Arbitrum and then bridge to Hyperliquid, which might stump up people from actually doing so.
So with that in mind, kind of this, I think you called it opinionated applications or opinionated applications that have their own kind of like verticalized stack. Is this a core party of Maven's or your personal core thesis? And maybe even better asked, like how is your like idea around the types of founders or investable projects kind of shifted in the last 6 to 9 months as we've seen this kind of flip in sentiment with regards to types of companies, and also kind of more renewed focus on, I mean, more than ever, just blatantly product market fit, revenue, and like returning value back to shareholders. Like, are you analyzing things any differently? Is your thesis has your thesis developed in a new way that is different from mid 2024? Kind of where are you at with regards to like how you're thinking about investable ideas?
Yeah, I mean, there's a lot to unpack there. I'd say first, yeah, it is that opinionated application thing. I think what we saw in 2019 to 2021, and I think that's when most people should have stopped investing in infrastructure, was that we saw sort of the building blocks for what is allowing us to build these new applications and build this new stuff on top of the infra that we built. I think a lot of people, ourselves included, got caught up in that infra funding theme and just kept doing that for years after we should probably have stopped doing so. So I think that's been a clear sort of, okay, do we really need a fifth restaking protocol, a fifth EVM L1 with slight changes? That doesn't seem to be the case, right? What we do need is like, okay, I want to use net new applications. I want to use net new financial instruments. I want to trade CME futures on chain. I want to go trade options, although I don't think anybody's trading options on chain. So that's maybe one thing we have yet to do. And also fixed yield that has to take off either. So, but there's still a lot of cool stuff that we could see. So I think that's been a clear, both from our own perspective, but also from other people, other people that I speak to, there's been a clear desire to do less infrastructure investments. And I think with our new Fund 3, we haven't really done much infrastructure investments at all. If we do any infra, it's mostly like extensions of Ethereum or extensions of Solana. And the rest of it is really applications on chains or even off chain in some cases of things that we see indicators that will take off, right? So whether that be Hyperliquid, Solana, or Ethereum, I think those are things we're all excited about. And then it's up to us to sort of find interesting applications there. However, like in a lot of those cases, they're constrained in what they can do. And that's also why I spent a lot of that time writing about these opinionated applications and using Hyperliquid as the example there. I think Pump that Fund and others will probably go down this route at some point. But we'll see how much like staying power Solana has. If they can keep these massive applications on them, great. And they're kind of trying to do this with implementing multi-concurrent proposers on Solana. So they do want to allow you to like control ordering to some extent. So maybe that will keep some people around and allow more sort of customization as application.
Yeah, I mean, you also put a paper about the kind of multi-agent AI. Is it MCP?
Or MPC. So there's
MPC.
two, right? There's multi-context protocol, which is AI.
Yeah.
I wrote about the proposers, so multi-concurrent proposers.
Okay, yeah, sorry.
But it's the same
acronym,
same shortening. Yeah.
Yeah. Now on the pump.fun side of things, the current CT sentiment is very bearish. It's very like overvalued. What they're going to extract another bill, but I've spoken to quite a few people here in the city the last week or so who are like allocating capital, and they find it actually to be quite interesting and appealing from a investment perspective. What's your take from Mads, not necessarily from Maven, as to kind of like where you're at with this pump.fun ICO?
Right. So I guess I'll start with saying like a lot of the negatives around it is saying that they're not making any money anymore. That's just outright false. Yes, they're not making the top of Trump fees, but that was only for half a month. They're still making a hell of a lot of money. And if you were to extrapolate that out to like what Hyperliquid makes, and then look at it from like an annual occurring revenue, then like $4 billion seems pretty cheap. And I think another bonus to this is if you look at the Plasma ICO today on Sonar, I think they raised $250 million with way more demand than that in extremely short period of time. And while Plasma is talked about on Twitter, it's nowhere not as much talked about as Pump That Fund. Pump That Fund is, alongside Hyperliquid and Binance, are the most talked about applications in crypto. And 4 billion for that seems pretty like low in that sense. So like, I would say that I think there's a lot of hype around them trying to raise that amount of money. I think if you look at the plasma raise, I don't think that would be an issue. And if you look at the revenue they're making, it's quite impressive. They obviously have a lot of hate, and I think they have to structure this entire setup correctly to make sure that they don't get more hate. But at least they've always taken the brunt of that force in terms of hate. I think when they come out with like and make it public what they're going to do and how they're going to redistribute wealth, whatever they might end up doing, I do think you'll see a different sort of reaction. And I do think some people have sort of pointed this out on CC that like it doesn't seem too crazy. I do get it. Like, okay, they sold 750 million, and so okay, maybe they should have given that back to the users. But like, okay, if they want to scale quickly, then like obviously you need money to do that, right? And then I think in terms of like long term, and I can see some people are obviously worried about that. In terms of long term, I think they really have to double down on. They're trying to double down on the streaming. I think they have to double down specifically on becoming a sort of front-end application, the Robinhood of crypto. The issue is that now you have to fight against Robinhood, which I think is a completely different ballgame and will be quite difficult. But it's interesting to see if they can actually do that.
Yeah, that seems to be somewhat of the consensus opinion outside of the actual reasoning as to what, like from people that are actually looking to allocate size into this. And then, yeah, Twitter seems to be like kind of saying that Pump is way overvalued and that it's a problem sell. Look, we'll see what happens. It's going to be a very interesting couple of days when that launches. Yeah. On the plasma note, I mean, our fund did plasma, so kind of disclosure there. But when I look at the demand for that, all just today with 500 million filled, I saw some discourse around whether it's like ICOs are back, or if there's just this latent demand of capital wanting to allocate to more quality fundamental plays. But then you also look at Circle up 4x from the IPO, and you kind of can draw a line here that I think there's a lot of demand for exposure to the stablecoin boom, you could say. I'm curious if you guys have done any investing into this kind of sector, or if there's ways that you're thinking about getting exposure to the stablecoin boom. If you have thoughts on plasma, just kind of curious about this general realm here, because I think a lot of people are looking at their book right now inside of crypto and out and wondering how to get exposure to stablecoins. Just curious if that's a part of your thesis, or kind of how much you're considering that personally or with Maven.
Yeah, I mean, it's something we're looking at, of course. I think if you were in crypto and have used crypto for a long time, I think it would be very clear why stablecoins are great. A lot of that reason is because blockchains are great. We have obviously done investments. Some of them are not public yet. Some of them are in terms of the past. But I think if you look at where most stablecoins are either used or deployed today, I mean, either you'd buy Ethereum or you'd buy Tron. You'd buy Ethereum if you believe that like stablecoins are going to be used specifically in like DeFi on-chain. And Ethereum is king here. So like if you want to get exposure from that, and we talked about L1s earlier, like some of that value, although not as good as on Tron, because there it's actually activity of money being sent about. And that obviously accrues to the L1. That's greater. But on Ethereum, mostly DeFi is still the main king there. In terms of like plasma, I see a lot of people like saying, why do we need a new chain just to send transactions? I think that fails to sort of realize that like a lot of these companies that are utilizing stablecoins are not necessarily on chain. They just have some provider they tap into, and then everything is handled on chain, right? And if the biggest stablecoin in the world goes out and says, yo, this is the chain that all of our USDT is going to live on, you should just plug in here and we'll solve everything for you. And then we don't have to be reliant on Tron, and we can say whatever we want about Tron in terms of security issues. But like, we'll do this just for stablecoins. I do see the value in that, but I also see sort of the anger and saying, why do we need another chain just for stablecoins? Well, if you're the biggest issuer, then yeah. And then I think you could also, it's the easiest way to get sort of exposure to stablecoins is probably also some other DeFi protocols.
Yeah.
whether that's yield stablecoins like Resolve or Athena, or other types of loops. Vaults, obviously, going to see a lot of traction as well. And then these sort of DeFi applications are very easy to take a small fee on, which obviously means you'll accrue value from the growth of stablecoins itself.
Yeah, I mean, I think it's left a lot of people in a funny spot where they're like, well, I've been using stablecoins for quite a while and been, invested into using on-chain applications and such. But, if you missed any of the Ethereum or kind of Solana waves, then it's been hard to get any upside to stablecoins. I think people are looking for that. Like when I post about Plasma, they're like, how do we get this? Or if you post about, different stablecoin, trends, they want to figure out how to get exposure. So, I mean, Circle is also, pushing that forward and very clearly bullish. But even outside of stablecoins, the last thing that I have for you is I think that there's this larger trend happening, and perhaps it's because the sentiment around tokens and crypto is quite bad right now, but perhaps it's just more so because of the regulatory regime being more favorable in that, like two separate things are happening. One is companies like Gemini and others are like going to IPO, which is like, okay, let's go IPO on the traditional stock market. And let's try to have a liquidity event in that fashion. The other thing that I think is like more kind of straggling, but we'll probably catch up, is this idea of like on-chain IPOs, or like companies that are perhaps not necessarily big enough, right? I think, somewhere around like $500 million per year in revenue or something like that to even think about doing an IPO or to qualify. It's some very large 9-figure amount per year. But smaller companies, perhaps like medium-sized, wanting to, instead launch a, on-chain IPO and launch a token in that regard. Do you see either of these trends as particularly compelling, or do either of these trends answer any given kind of question with regards to crypto staying power, how investors should think about kind of the exit opportunities of their investments? I'm just curious. I've heard both. Obviously, we all heard about Circle and Gemini, but I heard more about this like kind of on-chain IPO thing last like 2-3 weeks with regards to internet capital markets, which I know that you've been excited about. So just curious, like how you could see that developing, or any kind of conclusions to tie from that.
Yeah, good question. Have answers to both. I think we were joking in the chat about, hey, we have some portfolio companies that should just launch a stock, an IPO, instead of launching a token, because it lends itself better to that, especially if you're doing stuff that is attractive to institutional investors, which Circle are doing. Gemini, yes, to some extent. I think they've been outcompeted by others, but there's clear demand for exposure to stablecoins. Circle, great example. So I could see others doing this. And it makes sense, especially if you can't, with regulatory scrutiny and just general, like where your demand is probably going to be, why it doesn't make sense to launch a token. In Circle's case, it makes a lot of sense for them to go IPO. They're more of a traditional company. I will say, though, in terms of like smaller companies, and we have a lot of those in crypto that are nowhere near the size of institutional sort of size companies that an institutional investor would be interested in. There's a great answer to this. It's called, and you might think I'm going to say Launchcoin, but I'll get to that later. It's called HIP3, and it's on Hyperliquid. And hopefully in the future, it'll allow us to launch, in theory, stocks on chain. So like you could go IPO and then have most of your trading happening on chain. I think that would be super cool to see. I will also say, like, there is deep value in like helping people launch their own token and then accruing some of that trading value. But then you're still just the only thing that's really happening here is like, okay, you're just gambling, and then some of that value might end up in your pockets. I do see more and more applications starting to say, okay, either we do buybacks, which was a big thing in the past, by the way. It's not a new thing doing buyback of a token. And that was often looked down upon as like, this is too simple. Why are you just buying back? You want to hold everything. I think that's fine if they don't plan on like selling all of it. And it's pretty bad if like Hyperliquid, single market sells 75% of the supply in a couple of years. But like, it's a good way to just accrue value to the token. There's buy pressure. The other one is like becoming a security and like giving fees that you're making to the token. That's easier now with regulatory scrutiny becoming less of an issue. I could also see that changing, in 3 or 4 years if Trump isn't around, which I think according to US law, he's not allowed to, but we'll see what he figures out. I will say though, like I can see a lot of these Web2, and this is something I've seen in real time on the VC side. I'm seeing a lot of non-crypto like application developers coming into crypto and be like, okay, I'm going to build something here, and I'm going to build it here because it's ways of me to actually not extract value, but create value either for himself, the company, or the people that want to have a exposure to the company. And that's a lot easier with a token. So I am actually quite excited because we're seeing, I think, in often case, better application developers. And like crypto was an issue for a long time. We had no application developers, right? This is a cyberpunk decentralized network place for developers to be. And those developers are not the best at building a good application. I think that's slowly changing. And half the people that we're seeing now on the inflow side are actually new sort of founders. And I think that's probably going to have some lasting effect in a year or two down the line when you see these things start to come out. And I'm pretty excited about that, to be honest.
Yeah, I saw I saw a kind of staggering change in the types of founders that were coming to the space at the A16Z crypto event in the city. Like I think it was like last week, and in that there was people from Stripe, traditional finance, PayPal, these types, and they were all basically pushing for different types of like RWA based ideas, or just the quality of the people that were in those rooms compared to like some of the founders that you would see previously has been quite surprising. And then just on the like internet capital markets front with Launchcoin, people are excited about it, and it just feels like it's democratizing access and also just allowing smaller types of companies to enter the space. I think that there's a world where OnlyFans could launch a coin rather than an IPO.
Or maybe you'll get an AI OnlyFans that takes over OnlyFans. That could also be a possibility, and it might come out at some point. I will say though, on the Launchcoin thing, I think a lot of the price action now, not to get too much into price action, but we all look at the markets. I think a lot of that is also a reflection of the news about Pump.Fun, meaning it probably is getting some repricing and more attention from that. I still think we may have seen like very cool stuff being launched by people on Launchcoin. A lot of it is, slightly red flaggy, but hopefully that changes. And I do think Pasternak is sort of a relatively serious sort of Web2 founder that's now trying his hand at doing something in crypto, which is cool to see.
Yeah. He's gotten a bit of flack. We'll put it that way. But Matt, it's a pleasure to see you, man. We'll see you in Cannes. Congrats on the recent fundraise. It was good hanging in the city as well. And yeah, man, we'll be on the beach soon. It's a cloudy day here in the city, so I'm ready to get out.
Sounds good, man. I'll see you in France.
Cheers, buddy. Alrighty. Up next, we've got David, a good friend of ours on the show. We've ran a couple of joke race competitions with him. He's got some thoughts on persuasion markets, next evolution of prediction markets. He's ran some interesting competitions as of late. We'll talk to him about that. Talk to him about the state of the degenification of the world. See what he thinks about that and more. So excited to chat to David. Let's get him up here in a sec. Yeah, good, refreshing convo with Mads. There's one of my closer kind of VC friends, if you will, who has a lot of interesting insights around kind of like the broader sphere of things, but then we can also go technical. I had quite a few technical questions, but couldn't help but to understand what he thought about Pump.Fun and some of these other opportunities in front of us now. So our last segment of the day, folks, we got David in the building. He's probably calling in from like 2 miles away from me here in the city. So looking forward to having him on and talking about joke race.
Cool.
He's coming on up.
Cool.
Persuasion markets.
Beautiful.
Persuasion becoming the highest form of capital. Yo.
What's up?
Hello. How are you, man?
How you doing? Wow, this is a sick setup we got here.
Are you calling in from? Appreciate it. Are you calling in from 2 miles away from me in Brooklyn, or what?
I'm right outside your window, looking in, but I've been there all night. So yeah.
Nice, nice,
Yeah.
nice. Well, it's good to see you in the flesh, man. You've been on a bit of a tear with your new ideations. Got a
Thank
lot
you.
of questions for you about
Let's go.
what
Yeah.
you're thinking about here.
Yeah.
I wanted to start with like a framing of how I'm thinking about the broader kind of like macro trend of society, if you will, which is that I think there's just like this consistent like increasing speculative desire and like also
Yeah.
like this like financialization, and I'm calling it like the degenification of a
Yeah.
lot of things.
Yeah.
And I think a lot of people in our community are trying to figure out how to long that. So like,
Yeah.
how does
Yeah.
one long that? Like, and what are your thoughts around this trend? Yeah.
Yeah, I think there's like kind of two trends going on, right, that are kind of related to each other. And I'm spitballing, and this is the first time I've had this thought, so bear with me. But if I had to define it, it's almost like a DNA strand of like these two strands that are kind of circling each other. And one is financialization, and the other is vibes, right? The vibification of everything, I think, is like also just one of like the dominant trends of our time, right? And I think it's like I was an hour ago looking at this interview of this this like tech supporter who switched from Bernie to Trump, and everyone is scandalized. Like, how could you switch from Bernie to Trump? And guys like, well, vibes. I don't know. They both seem to me like anti-institution kind of guys who say whatever the fuck they feel like. So I like that, And everyone's like, no, you're not supposed to choose politics based on that. You're supposed to choose it based on policy. And he's like, yeah, I know policy, but like I'm into vibes. And this is like really hard for an older generation, right, to wrap their head around, right? To be like, no, the vibification of everything is like very real. And it's like, how is Trump picking, his cabinet members? It's like, I had a friend of mine who's like, he picks the people who would be good on a reality TV show because he's picking by vibes, right? And he's like, he has a vibe government, right? And so I think this is like you look at these two things and then you think, okay, well, how do they intersect? Like what's the intersection of like social capital winning out, with virality on the internet, and then financial capital being, democratized, accessible to anyone as well. And the question is like, really, how do you long vibes, right? Like what can you do to long vibes? And I think meme coins are like part of the reason meme coins took off is like meme coins are a way to like long vibes, right? And they're exciting. Like prediction markets kind of a way to long vibes, right? And so I think like what we're working on, what I'm calling persuasion markets, like, yeah, it's also, I think, in that kind of trend of like, how do you fucking long the vibes?
Yeah, no, seriously, because I think like it sounds silly, but like it makes sense if you actually are, I don't know, if it's in the trenches is the right way to put it, or if you've just been paying attention to kind of like the way that things have been transitioning.
Yeah.
So you put this kind of formula, speculation plus social consensus, is these two kind of like different pieces. Maybe you could just like find the through line there for us as to like how that comes together, and like where you're seeing that intersection, or is that just kind of what you described?
Well, I think like in crypto, crypto is very divided, right? You'll meet the best people in the space you've ever met. You'll meet the worst people. You'll meet the smartest people. You'll meet the dumbest, right? But I think like the main divide that almost everyone notes in, oh, sorry, my camera is giving out on me, but you can still hear me. The main, it'll come back in a sec, hopefully. The main kind of like formulation I think that people talk about a lot is like of degens, versus what we might call like, I don't know, governance people, like social consensus people, right? So I think of it as like speculation and social consensus are like really the two sides of crypto. And so like the social consensus people are like the ones who kind of were like winning out in like 2021, right? And I think the degen people are the ones who like really went out in like 2024, right? And the thing is like either one like has its pros, has its cons, but I'm not totally convinced that either one really works on its own. Like, I think if you're just pure degen, you're just Ponzi's, and like those eventually will collapse, right? You go up, you go down. Sorry about my camera here. If you're like pure social consensus, then like you build this beautiful tool, but there's no actual like revenue model for it, right? There's no way for you to like actually make any money off of it. You're maybe doing B2B SaaS, like at best, right? Off of that. And so I think the question is like, okay, how do you get like the longevity, sustainability, excitement, community building, positive values of social consensus with the actual fucking ability to use crypto rails to let people earn money of the speculation, right? And it's like they each kind of solve each other's problems. Like you need to be able to make money, but there's been no real sustainable way to do that, like with any app, right? On the one side, and then like on the other side, like you need people to be able to actually like build community, have fun, but there's been no way for people to do that they actually make any money. And so it's like it's really kind of fascinating to see how much these two sides hate each other. And I'm kind of like, no, actually bring them together. Like I think if you combine these two things, and a good example of this is like Polymarket, right? Like Polymarket and prediction markets are like, those are literally speculation plus social consensus, and they are lasting, right? Like Polymarket continues just to kind of dominate because it's like really given a way for people to be able to bet on like things they care about and things they want to see happen in the world, and like, you know, things they're personally involved in, and they get to along the vibes, right? So yeah, a simpler way of saying like speculation is longing, simpler way of like saying social consensus is vibes. It's just longing the vibes.
Yeah, man. Yeah, no, okay. I appreciate that explanation because it's two separate things, but like are very very kind of rooted in crypto's nature, at least in its current state. Okay, so kind of zooming out from the core thesis, more on like the actual kind of like more like product or like thought process side. I put out a tweet today that was kind of, you know, elaborating on my current mental model around how I'm looking at like early stage investing and thinking about how some of these things are going to, you know, they'll saying accrue value, right? It's kind of a meme, but it's funny. And so my first point was around just like the top of the funnel, highest level of user relationship, and that wallets are like getting this notable stickiness amongst a ton of apps that now, like where application builders first thought of wallets as like a necessary evil, they're now looking at them as almost like a competitor, or like almost as like a way that they should maybe think about siphoning off some of that mind share or you know, user share. So kind of like walk us through your every app doubles as a wallet idea, and like you know, how either joke race or how you plan to see apps, you know, or how you're thinking about apps going out and like whether it's siphoning off some of the market share, something like a MetaMask or a Phantom or a Rabby, or just creating their own kind of gap to bring new users directly from wherever they are onto their wallet, onto their platform.
Yeah. This is, I could get pretty deep into technical conversation on this one. So, you know, there's kind of two models for wallets right now, and then I'll talk about a third that also is kind of on the front lines. And one is these like self-sovereign, you know, wallets, right? Like that are standalone and interact with any dApp. So MetaMask, Rabby, etc. Right, is one model. The other model is an embedded wallet, right? An embedded wallet like lives in the app, and so you can open the app, you have no crypto experience, you can just like add money, and then the app is the wallet essentially. But there's issues, right? Like there's I'd say two big issues with using embedded wallets instead of using like MetaMask, Rabby, etc. One is that the main audience for crypto apps is crypto native users who already have a wallet that they want to access. And so if you're asking them to like go set up a new wallet through your app, that's a lot of friction on a UX level. And so like a lot of times embedded wallets are presented to us as like this panacea that like, you know, automatically lets anyone on board, but actually they create more friction for your native user base, which is like, you know, crypto native users, right?
Yeah.
I think that's the first issue. The other issue is that you as the app don't own the user anymore. The embedded wallet owns the user, right? And so like you start using an embedded wallet like fully, and the user like belongs to them. If they ever want to charge you like 100x what they're charging you, like you pay that, or else your users are getting locked out. And if essentially you're back in like the app store model, right? It's like you're dependent on this like app store that's going to take a giant cut of your revenue potentially, and it's the one that actually is like giving you, you know, is controlling the user, right? And controls the financial rails. And so for a long time, I was like very anti-embedded wallet. I will say like we use Para for anyone who like wants to create a new wallet. And that's really nice. Like Para is really great because they integrate through Rainbow Kit, and so we're not dependent on them. Like you don't have to create a Para wallet, But if you've never used crypto before, we give you that option, and you can create it through Para. Para also gives like really nice ways for people to offboard their funds. So like if anything ever happens, like they can still retrieve their funds and take it out. And we've built ways for people to do that on the site too. And so I think like we have this nice happy medium where if you're a crypto native user, you can come and you can use MetaMask Rabby. But if you are like, you've never used crypto before, we can actually put you through a flow to create your first wallet all entirely in the app without ever downloading anything, going anywhere else, being able to fund it. We also use Coinbase Pay, which we introduced a month ago. And like, that's really great. You can just add a debit card and like literally add cash. It's also really nice because we're live on like 30 chains. And so if you have money on one chain and not on the other, like instead of bridging, you could literally just put in your debit card, buy $5 and like be good to go also. And so it can be, and you can do that regardless of what wallet you're in. You could do that if you're MetaMask, but still totally do that on the site. So I'm really kind of like proud of like how modular we've built this. It's quite different, I think, from how other apps have developed it. I will say like the long-term, ultimate solution is smart wallets. Like that's the third option that I was alluding to before. Like smart wallets are really fucking cool because like, you can embed them within your app. Like you can still essentially like have control over the user and have this like protection, and they have control over their own funds like through you without ever leaving the app. The problem is that there is no smart wallet that really is like built across different chains. They're really chain specific because of domain issues. So that still feels like a kind of future solution. But for now, I'm really happy with how we built this with like Para's great. They're just really nice at being able to like let you get all the advantages of embedded wallet without the kind of user lock-in that you traditionally incur.
Yeah. And so is there a world where then you go and you make like a joke race, like downloadable wallet on the App Store, or like a downloadable, get me from like, okay, my user uses my embedded wallet to like, no, like I advertise on like TikTok, and then my user goes and like gets my app but it's not my app. It's like, it's my wallet that then directly gets them to my app. Like, is that a flow that builders should be thinking about? Or
so it's pretty interesting to think about, because like traditionally in app building, you wanted to like launch in the App Store for a bunch of reasons. Like one is distribution, right? That they can like feature you, showcase you there. Another is animations, which actually is fairly close to being a solved problem. Like you can basically do a lot of mobile animations outside of the App Store now, with a lot of the kits that even have been developed in like the past 18 months. And we haven't implemented a lot of those yet, but we're looking closely at them.
And when you say animations, is that like a graphics
it's like
design
React
thing?
Native, like React Native, like, button animations where you tap something and it comes, and like hearts come out.
Okay, gotcha.
Like there's just a feeling you might sometimes have when you're like interacting with something on a mobile site versus like in the app, where it feels more vibrant.
Definitely,
that feeling is the animation, right?
Gotcha.
Like that's the feeling of like you're tapping and the hearts come out at you and there's confetti and stuff. So it's just like there's a bunch of, you're hovering over it and it like changes colors, and like character jumps across the screen at you. Like a lot of this stuff has traditionally been very hard to do in browser, and it's been much easier to do in a React Native app right on the App Store. But that's changing like quite a bit. And then I think like the third advantage is notifications, right? Like if you can download it to your phone, then you can receive notifications. But actually that's semi-solved if you get people to save it to your home screen. And so it's interesting because like distribution from the App Store is like the one major advantage. And I don't know that that's worth 30%, plus the need to like have a whole separate code base for your app where you're both deploying it on a desktop mobile version, and then you're also deploying it in React Native. So yeah, I think it's something that is like worth thinking about, especially as Apple is losing these legal battles and people can claim it. But like, I'm not totally convinced that like the App Store is the necessity that a lot of other app builders do. A simple example of this is like, you think about like, what are the really successful apps from the past 10 years? Basically they're all from crypto. None of them went to the App Store. Like if you think about like a consumer app that's actually been really successful with the App Store, like, Be Real, TikTok, like 2016, 2017 are about the last times. And then the exception to that is ChatGPT. And ChatGPT launched for like a full 6 months before it even hit the App Store. Like people were just using it on their phone and
on the website, basically.
And on the website. And like that ChatGPT is also interesting from a design perspective because it's literally like just text. Like it's one of the most raw, basic kind of apps you'll encounter, and that like actually fits a lot of trends, which is like people as technology gets more hi-fi, people like more lo-fi kind of things.
Yeah.
Right? And
It's like
so
a nostalgic
like
feel almost.
just simplicity,
Yeah.
accessibility, right? Like and so I'm watching that, but I wouldn't say that I am like as excited. I think as some other app builders understandably are at the potential of being able to launch through the App Store. Being able to avoid the App Store. I've launched multiple apps through the App Store in the past, and like being dependent on Apple is just like, again, part of the point of crypto is to lower your dependencies, right? So that's my whole point with the wallets. I think that's also my point with the App Store is like the more we can lower our dependencies and have sovereignty, like that's the whole point of why we're using crypto as our financial rails. And that's the closer we want to get to that, because dependencies are what fuck you over as a company. It's like every time Cloudflare is down, like that's going to cause massive issues for our users, and we're going to get blamed for it. So like just decreasing dependencies has been a major, I think, part of how we built.
Couple kind of like off the cuff ones for you. What are some of your favorite apps in the space today in crypto?
I mean, the winners are winners for a reason, right? Like Hyperliquid and Polymarket and Pump Fund, like those are kind of the top three, I feel like, for a reason. And I would define it as like, something to do with social consensus.
Yeah, me too.
But like, there's also just like, the UX of like Hyperliquid is just, I am awed by it. And I know that it comes with a lot of trade-offs that I'm not thrilled by, but like, some of the stuff they've done, with like, I guess signing on your behalf with the gas abstraction is just like, it's really smooth. And Hyperliquid's interesting because it's like, it looks terrible. Like it looks like shit, but the UI is awful, but the UX is amazing, right? Like the UX of like actually being able to just interact with it seamlessly and get it to do what you want is gorgeous, right? And so I think like that's the thing I think about a lot too, which is like a lot of the consumer apps in the space, like I think in my mind, like really over-index on UI and they really under-index on UX. Like they really create this beautiful visual experience that's gorgeous, but it doesn't do anything that you want it to do, and you don't understand what it's doing.
That's so true, actually.
Yeah. And like and so I will always prioritize UX over UI. Like I think that's far more important when you have a bottom line, and the bottom line is people want to make money, right?
If you could bring any 2 or 3 people from CT to join the Joke Race team, who would you choose? Who would you poach?
Oh my god, who would I get to join the Joke Race team from CT? Andy, we need you. We gotta get you. Yeah. Number one. Yeah, you're the greatest shiller I've ever seen in my life. I learned from you. I'm like, damn, man. Fuck marketing. Get Andy. Like this is it. And then David Hoffman, because it would just be funny to have the two of you. I think. Like, yeah, if I have you, I have to have David Hoffman.
Oh my god.
Hilarious.
Last one for you. What have been some of the best recent Joke Race competitions and contests, and what was the what was your take on the Solana versus ETH events thing as well?
Yeah. So I'll actually talk up some ones that are coming up. I think I'm allowed to do that, although things can change and it's it's up to them. But Avalanche, I believe, has a big community showdown, and Story Protocol has a giant demo day. I'm really excited for those. I think like the idea that we just introduced this feature called Vote and Earn, where you can show up. If you vote on a winner, you earn. And so now there's incentive to show up. Like for something like a demo day that Story's doing, it's really exciting because people have incentive to actually go watch the demo day and figure out what's the best project, because if they can vote on that, they can earn money, right? And so it creates this whole like almost marketing incentive loop for people to engage there, and using the financial incentives as like an engagement tool. But then it also incentivizes them to go share those projects with other people and be like, hey, come vote for this so that it wins. And I think it should help with virality, and it lets them signal that there's support to these projects. So like, one question that I think haunts the space and haunts me is like, if you lose money, like, did you have a good time? Like, is this still something you would use again? Right. And, there's some gambler fallacies that work really well for stuff like meme coins, where like people lose money and they have a terrible time, but they still come back because they want to gain it back. you know, and like that kind of works. But like I would really like, you know, eventually like NFTs worked like that for a while, and eventually it dies, and altcoins worked like that for a while, and then some of them die, some of them live on. I would really like something where it's like people had a fun time, like they like met other people, socialized, shared this thing, learned about projects they were interested in, and then come back. And the financial piece is like, you know, it's a magnifier for the emotional experience that they're having.
Yep.
So that stuff I'm really excited for. Drea is doing this like AI competition of like AI bots will be battling each other, and if you vote on the winner, it steals the other one's treasure. And so you want to try to vote on the winner, not just so you can earn directly from the contest, but so you can be part of it. And I think the winner at the end of it will be like minted as a meme coin, and so you're also like providing liquidity for like this thing to go viral eventually. So like that kind of shit I'm really excited for. You know, speculation plus social consensus, right? What was the other question?
ETH versus Sol events as we kind of
Sol?
come to a wrap here. Yeah. What was the end? What was the
Yeah.
result there?
I mean, I take the stance that the none of it matters. like you know, ETH is like obviously has a lot of issues with focus. Solana does not. But like ETH issues with focus also mean that you can like really find the long tail of subcultures of like people who share your beliefs and are like interesting to you. And it's like, yeah, if Ethereum is having like 1,000 different events at one moment, then you're guaranteed that one of those is going to be something that's really relevant to you, right?
Yeah.
Whereas like Solana will only have one event and it'll really centralize. And so it's like, it is interesting seeing the centralization versus modularity like play out. Like,
Yeah, in events
level.
in the offline spaces as well. It's crazy,
Right.
actually.
But I'm like, you know,
It makes sense.
monolithic versus like modular, like that's the means. Like what you have to think about is the end, which is like, am I actually like building a connection here that's going to help me build my company? And I think it's like, I do feel like we're moving out of an infra B2B era of crypto towards a much more like, you know, B2C. Like you actually need an end user, and like those end users are probably not at crypto conferences.
Yeah.
Like if you're doing B2B, like it's good, but it is just interesting. Like in some ways, crypto's been much better at building B2B SaaS models to date than it has in building actual crypto native models.
Yes. Yes, that's a bit of a hot take right there. David, I appreciate your time, man. Have a great week.
A pleasure.
And keep thinking on, you know, in public. People care.
Same.
It's
exciting for you and David to join the Joke Race team too.
Stoked, dude. See you soon. I'll be at the office tomorrow, 9 a.m.
Okay, I'll see you at the office. That's right. It's right outside your window, so easy to get to. Cool.
All right, man. See you, buddy.
Bye.
All right. Stream today was pretty good. Couple hiccups here and there, but nothing to fret about. I think the market, let's see what the market's doing. We said 108.5 or 480, I think. We're at 108.634. Market's looking good. Trump just put out a tweet, Trump just said every U.S. citizen born between December 31st, 2024 and Jan 1st, 2029 will receive a one-time $1,000 contribution from the U.S. government in a tax-deferred account that will track the stock market. They are literally printing money for our babies. And that's that. Otherwise, very excited. It was very like DeFi heavy and kind of application heavy stream today. I think we'll probably have some different topics and overall subjects tomorrow and into Thursday. May have a special co-host as well. Guys, as always, thanks for being a part of the Rollup. Shoot us a like, subscribe across the board, and we'll see you guys tomorrow. Thank you.